Alrighty, Friday. It is TGIF. Thank goodness it's Friday. Got another week. And in the following week, we go into another 3-day week, I believe. We have Martin Luther King Day on Monday of the 16th. So, or is it 15th? I think it's the 15th or 16th. I saw a note come in from the NYSE yesterday. Let's see. It is the 15th. So we'll be here broadcasting on the 15th. We'll be doing our normal day, but it will be a 3-day weekend. So hooray for us. I like 3-day weekends. 2 in January. Nice. We should have a 3-day weekend every month. Wouldn't that be nice? February, you get one for President's Day. And in March, I believe we will be getting one too, because Easter is early this year. So that's 3 months in a row. And then April, we have to sweat the bullets. And in May, we get late Memorial Day. So there's another 3-dayer. And then 4th of July, there's another 3-dayer. And August is empty. All right. Let's take a look at it. Again, the dollar is, firm. Has no problems. More than just the clowns as the politicians in this country, but that's besides the point. The dollar is, this morning, the inflation number came out about 2.9% in Europa, the second largest economy in the world. So the question mark now is, will they start cutting? Will they start cutting as soon as everybody thought they were going to start cutting? Everything stares on the central banks, and the central banks are the buyers of last resort. They are there's the Llanos. Dollar seems to be going higher. Inflation looks to be back. Commodities have went higher. Energy costs are up due to Houthis. And after reading an FOMC minutes, people see that the Fed sees cuts only at the end of without a doubt. That's what I've been saying here. They're going to do it going into the election itself. So in other words, it had to be after the primaries, after the two candidates are set, and then they start lowering interest rates. That's the way I see it. Looks like they will have to hike. Your comments on this? Hey, Robin. Yo, Robin. Hey. Yo. Well, let's see. Let's take it from the beginning again. We already started rambling on this before I saw the chat line. So the dollar, we already know what going on with the dollar. As I said, the inflation is perking its head up again a little bit more in Europe. Same thing here in the States. The core rate is around 4%. Europe is around. I'm not sure what the core rate is in Europe, but they're showing 2.9 at the moment. It's a lot better than that 61.8% they have going on in Turkey. So I feel good. I feel real good. Commodities. What can we say about the commodities? I guess we could look at a generality of the commodities. Let's do that. And that may help take a peek at. If we go like this, we're going to show you what we sent out this morning. So let's move that over to... let's just do it right there on the same page. So here is, there's cattle. Let's see, move that over to there. We can go like that and just keep on pushing. There's cattle. Cattle's been on an upwardly slope, as you can see. Where's that, Mr. Mouse? There it is right there. Been an upwardly slope. It's trying to get into the weekly buy this week, but overall, it was in a weekly sell for a long while and then drove all the way down to here. We go into a daily buy right there. And, you do your ins and outs. But overall, it's trying to get into that weekly buy today. So that is something to keep an eye on. That is feeder cattle. That means they're paying $1.71 a pound on the hoof. That's what they call it, on the hoof, which means that they're buying the whole animal for $1.71. $171 or $1.71 a pound. That's pretty interesting. That's pretty high. Historically, we used to trade in the 80s and the 90s. We didn't even see $1. Once in a while, it's summertime, when everybody talked about barbecues, it would get up to like 110, 115, something like that. Robin's traded in that pit. How about for you, Robin? What you do? See, used to be 63 cents up on the hoof, 83 cents, 90 cents, stuff like that, right? Then we take a look at, that's the February cattle. Now we take a look at where did it go? The the next month back, right there, and that's so it must be the other way around. Oh, there's Feb. Where's June? There it is. There's June cattle, looking the same way. June cattle went into a buy last week, and you can see that strength there. So your hamburgers and your lunch meats and all that stuff goes up in price when you have it almost doubling over the last couple of years. Then you go over to the corn for corn flakes, and there's the March corn towards the lows. So that commodity's been finding a way to go down. They're turning up, but they're not exactly turning up from like high areas. We saw $8 corn, and now it's trading at $4.66 a bushel. That's $4.66 versus $8. So yeah, commodities are not exactly showing a lot of push and shove. There's May. May corn is still in a sell. Still pressing down. So I don't see that too much. There's crude oil. There's the February front contract. It's more down than up, and it's trying to get into the buy. But overall, I don't see the commodities as lifting here. Now that's the S&P 500. I guess you could say the stocks have been very expensive. And let's see. Let's find another commodity. There is feeder cattle. It's little baby calves, and they're charging $2.24 for a pound for a little baby calf. So they're the feeders that become big cows, and there's about a 50-cent discount to that. And you can see they were up in the 260s at one point. So we're not really seeing commodity increases that are having much of an effect. Let's go around the food chain. There's gold. Gold is interesting. Gold's been down for a couple of years, but 2023 gold was up 10% for the year. So it's really hard to believe that gold doesn't reflect the inflation that everybody sees. Central banks do lots of weird things. You try to buy it physically. There's copper. That's the Chinese, of course. There's heating oil that we, in the Northeast here in the United States, we use a lot of heating oil to heat, houses and so forth. And that's at $2.59 at the moment. So that's not exactly, you can see it was much higher, up around 280 just a month and a half ago. So that's not having any real effect on the inflation either. Right there is hogs. Whee! That's the February hog contract. And when you want your pork chops, that's pretty much where it's at. Now, this is on the hoof also. This is not bellies. This is the whole hog. And it's about 66 cents, is it? Yeah, it's about 66 cents. It's come down from the 76-cent area. We are having a wild bounce. That's yesterday's move there. Let's see. What else can we say? We'll just go around. There's April hogs. April hogs are trading in the 75-cent area almost, 74.97. So there's a lot more premium in the back months there. And that's probably because they're thinking of barbecues. Now, there you go. There is natural gas. It's been moving up, but it still hasn't taken out, say, the December high. So overall, I could keep on going, but what it comes down to, there's wheat. That's red wheat where they make cookies and cakes and so forth. And that's showing us that that's the March contract, and it's down from last month's high, and there's last month's high right there. So no, I'm going to stop going through them, but I think that makes my point, and that is commodities are not really having much of an effect. They haven't gotten high, except for the analysts who are writing about it. Maybe they got high. Maybe it was a holiday party, and they got high and they started writing about stuff. I don't know. Maybe the chart's upside down. So that's with the commodities. So nah, there's not much of an increase in commodities. Energy costs are up due to Houthis. Houthi. Not really. Let's put Brent up on J4X. Now, no doubt, natural gas is moving up. There's no doubt about that. But let's put Brent up there. And Brent is more at its lows than it's at its highs. We were looking at it. Weren't we looking at a $100 Brent a while back? Let's see, where's it at? Brent. There it is, right? One more up. There it is, Brent. And we'll put it up on the whole screen. There you go. I mean, no. I think who was getting high was the guys that are writing the stories about the commodities getting high. That's what I'm thinking. That's exactly what I'm thinking. You can see, if you need to see Brent again, we can do that. There it is again. That's just, let's see, where's last month? That's December. That is November. November is higher than December. October is higher than November. And September is higher than October. So, nope. 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 All right. What else can we say about that? All right, that's enough with the energy. So, that has nothing to do with it either. So, I think it's just spending more than anything else. That's all, and no growth. That really hurts. When you limit, see, there's a philosophy in the old days from the Keynesians, the socialists and so forth, that believed in a capitalist system. You had to shut the economy down to get rid of inflation. And that was a lot of pain for a lot of people. People got laid off from work and, so forth and so on. And prices were going up. And then they had to literally stall the whole economy out. In the Ronald Reagan, Donald Trump supply side economics, which is always much better, of course, because the stats show it all the time. And the people like it more all the time, but the left hate it all the time. It shows that if you just increase production, more product brings down prices. Less product brings up prices. We're going to try that again in English. More products bring prices down, reduce inflation. Less products, when you shut the economy down, raise prices, because people can't stop eating just because the government says, well, we're going to get rid of that inflation. So shutting down society and industry and so forth increases prices and increases inflation. Now what they do is they starve us for a while, and then inflation comes down through lots of pain. Notice under Trump, inflation was at 1.41 because he had the economy growing all the time. Even during COVID, he kept the economy growing. And so then you had, under Mr. Biden, you've had the economy contracting. We have over 50% of all new jobs are government employees, which we all know are unproductive. They don't grow an economy. They just make the labor numbers look good. I guess what they kind of think is that it's kind of, there's a story. It was what's his name? Trying to think of his name now. He lived on. He was a riverboat captain, and I'm trying to think. Mark Twain, and Mark Twain wrote, Huckleberry Finn and all that stuff, and they used to whitewash fences, but get paid using paint instead of whitewash, which was like a powder. And so it was a lot cheaper, and they got a lot more money for it. Not a lot more money. They got the same amount because they told people they were painting it. In the beginning, it looks great. The moment it rains, it gets washed off, and then your fence turns gray again. The Democrats are like Huckleberry Finn. They pretend, but they really don't do. They talk. Like sanctuary cities are suing Texas and so forth because the sanctuary cities are being flooded with immigrants and they can't afford it. But they're sanctuary cities, so they're supposed to accept it because that's why they declared themselves sanctuary cities. So they're suing other states for money because the immigrants came through their state. So when they try to block them, they sue them at the same time. So they try to, the border states are being sued by the sanctuary cities and by the federal government because they want the immigrants, the illegal immigrants, to come in, and at the same time they want to sue at the same time, which is very confusing. If they were really sanctuary cities, wouldn't they be like loving these people? Wouldn't they just want to marry them, adopt them? But instead, they're suing instead. So that is the idea about inflation overall. Grow an economy, increase production, you have less inflation, like Mr. Trump or Mr. Reagan. Stall an economy, slow it down, reduce its productivity, and you get inflation. It's not that complicated. It's just you won't have not many people besides myself talk about it. That's all. How's that, Giannis? I think that's making it pretty clear. Matter of fact, now we've even got a title for the day. I was wondering, what could we talk about today that we could have as a title, And there it is. Increased production and less production. That's pretty much perfect for the title of our webinar today. Yo, Robin. Yes. So that's pretty much where it's at, and that's where we're at. So let's see. Let's look at a little bit more with he said. Let's see. And after reading the FOMC minutes, people see the Fed sees cuts only at the end of the middle. It'll be like July or August or something like that. That's what I've been saying all along. I can't even imagine March, and I can't even imagine, between the election and say, I guess they're kind of trying to plan on it. So imagine if they go into June and they cut June, and the next chance would be probably the middle of August, and then the next one will be the end of September. So I guess they could do 3 cuts in a row, and then people will be really freaked out. So, they'll be freaked out in the sense of, why did that happen then? And they'll be all saying it's election, and they'll see the politics, and they'll be all frustrated from it and so forth. I don't think they'll hike. All they have to do is do nothing at this point. Well, let the economy grow. That would be what they should do. But the regulations are insane now. They're trying to outlaw our gas stoves in our house. Now, San Francisco, a court just overturned it for the time being. But that's what they're doing in Illinois and in New Jersey and New York and in a lot of different states. They're trying to outlaw gas stoves and gas ovens. So, they can't find. They can't. Listen, how do we say this? The left in our country can't find anything but ways to slow the economy and hurt it. That's it. That's pretty much what it comes down to. So, all right, that's the answer to your whole adventure there. And that is my comment. All right, now let's get back to the dollar index. It's not moving that big, the dollar index right now. It's moving, but it's not moving that big. Let's see. Let's put that up on. There it is right there. It was up on there already. Okay, yeah, you can see that. There's another day moving up. You can see the daily's been in a buy for 4 days. And the weekly is trying. Let's put it that way. Now, that's a day behind that weekly signal. So let's go to the screen here. To the screen. That's the S&P 500 trading live. At least it was a few seconds ago. Oh, yeah, there it is. It's just ticking so slow. We have unemployment numbers coming out in 40 minutes. And so that really has the markets captivated. They're excited for the numbers. There's the dollar index there. And you can see we are getting very close to trying to get into the weekly buy, but it's still not there. A little curve going on in here. We were in a daily sell, and we've been in that daily buy since right here. Let's steal this green and put it in there. There it is. So we've basically been in the buy for the last 4 days, and not much more to be said about that. And it's I don't after watching as someone as we're we start off as a currency webinar in the first 40 minutes or so, something like that, 35, 40 minutes. And you have to assume we watch, all the major currencies in the world. We rarely look at the weak ones. The only, I don't think we look at any of the weak ones at this point. We do go to we look at the number one brick in the world. That's the South African rand. So, the yuan is a fixed currency to the dollar. That's the Chinese currency. The Hong Kong dollar is also fixed to the dollar, and a lot of countries fix their currencies they follow the dollar. So, there's not much to be said. Ruble, or like we like to call it, the currency that will not be named, is still in the 90s. So, it's played with over the century mark since we stopped paying attention to it. I do watch it once in a while. I take a look at it every couple days just to see what's going on there. But overall, we're not, the strong worldly economies, and we put China in that because they're like number 6th economy in the world or something like that, or 5th, right around that area. But, we've got the European Union is the 2nd biggest economy in the world. We got the United States as the 1st. Then I look at the Commonwealth as the 3rd. I look at Japan as the 4th. Great Britain and China fight it out all the time for who's the better economy. It seems like British pound, Great Britain is the better economy overall. So, but they are a large economy because they're a colony of America, the Chinese economy, and since they're a colony of ours, we do over $500 billion of trade with them every year. That's a lot of money. Wouldn't any of the other economies wish that they got $500 billion of trade with the United States? It's a lot. It's a big number. Nobody likes to talk about it, and everybody wants to pretend about China being a powerhouse. So, and the key word there is pretend, and everybody wants to forget that China is a colony of the United States. So, for me, I'm the realist here. I can prove everything I say, and nobody else can prove the opposite of it. That's the fun part. It doesn't really matter. I guess it's the classic. If a tree falls in the forest and nobody is there to listen, does it make a sound? I say yes, but most people say no. All right, let's get over to the euro. Where are you at there? There's the euro. And you can see the euro, it's just been down in this range for the last couple of days. Yesterday, it started to look like it was going to get some life. You can see right here, it's putting some pressure on the upside. You can see here the weekly's weak, but it's not through it. They're not knocking it down that hard. Let's put it up over there on J4X. Let's see, where's it at? Right. There it is. Okay. And there it is right there. Oop, let's get that out of the way. There's the euro. You can see it, the red, but not going much. It's just like the platform on the right. It's not really pushing down that hard. It's just kind of stalled. Look, there's no real conviction in the market itself to make any moves until after we see some of these primaries get out of the way. Once we see these primaries get out of the way, and they're coming up next. I guess it's we're about 9-10 days away now from the primary. I think it's on could be the 15th. Is it on Martin Luther King Day? Probably maybe the 16th. So we're probably like 9-10 days away, something like that. I'm not sure exactly, but once we start to get these primaries out of the way and they make Trump the official winner of it all, then I think you're going to start to see money start to make a decision. And they like to anticipate. We've talked about it here before. We've proven my point before. I love the idea that I get recorded live every day. This way, anybody listening in or watching it can say, he's right. He's always right. I'm not always right, but I'm about 85% of the time right. And it's been that way for years upon decades. And so what we're trying to tell you right now is that money will not commit itself until they get a clear idea about who the Republican presidential candidate is going to be. Once they get that out of their, get that clarified, and the polls don't work this year because, Trump is leading so big in the polls everywhere, and Biden is falling so hard on the polls. He's so low behind, and normally you would consider that they can't win, but everybody knows a good 40% of the country doesn't trust the elections anymore, and that's the problem. And so, and now you have these goofy lawsuits. 2 out of the 4 lawsuits on Trump is his contesting of the last election, when you have over 40% of the people thinking that it was stolen and not fair to begin with. So that's really hard. That's a big number. Over 1/3 of the country doesn't trust the elections anymore, and the numbers who do not trust the outcomes of the past now make it really hard for money to want to commit money. You're managing money. You're trying to project, just as we showed, when Janos asked that question 3 or 4 months ago, what's going to happen over the next 3 to 6 months, and I gave 4 stocks, and within 48 hours, one of them almost doubled in price, and now has doubled again, and so money managers they try to look down the road, or they what they refer to, they call it downstreaming, like in a river. They try to figure out where the river is going to, where it's going to be running. In this case, they look at the individual companies. They try to figure out which ones are going to be in demand. Their earnings are going to go up. Their dividends are going to increase. And so right now we're in a situation where money wants to just sit on the sidelines and watch. And they'll do the basics. In other words, a money manager just can't go to sleep. They've got to participate. When one of their stocks gets over 3% gain in the portfolio, they've got to liquidate a little of it and bring it back down to equal value again with the rest, and vice versa. They don't do the cannonball thing that people think, where you think, oh my God, the stock's going up, let's buy more. It's like, no, they don't do that. They try to make money, and they try not to lose money. And so that's where we are right now, is that money doesn't want to really get pushing. Matter of fact, the last 24 hours, because of my attitude that I just described about, the economics and the inflation and all that stuff, I was looking at the DAX, I was looking at the Nikkei, I was looking at the London FTSE, I was looking at them because they're all moving down, since the first of the year here. And so is our stocks, and I was thinking, they're not really, reaching it. A lot of times they get into these modes, money managers, like, well, we think, foreign stocks are undervalued and they can outperform, that type of thing. And what happens is that they start to, they have a certain amount of money set to the side to, invest. And for, as long as it fits their criteria of how they incorporate it, they start to, jump in a little bit. But what we've been seeing is the opposite right now. Let's see if we can put that up on the screen. Here, go. Let's put that on there. Here's the, who's this first? Let's do the DAX first. Where do I have the DAX? DAX. There it is. Let's put this on the screen. Right there. There's the DAX in our math. You can see it's been rolling over just like the S&P has. It was up pretty high there. You can see that. When we go over to J4X, let's put the DAX up on J4X and get a broader picture of it. And it's going to fill in a second. Let's see how it goes. I just had a sip of tea. There it is. Okay, so that's over the last. That's November. It bottomed like everybody else. They all follow each other, and money right now is not making these things go up any faster than anything else. So there's the DAX. The FTSE I think was at all time highs actually. Let's see if we can find the FTSE. What is the symbol on the FTSE? Let's see if we can put that in. Was it oh, that's not it. Anybody listening? Anybody know what the symbol is for the FTSE? I have it on my machine, and I guess let me just put the FTSE up on my machine for the time being, and then maybe someone can kick out and let us know what the FTSE is on J4X there. There it is, right there. Let me punch in LEG. Maybe that'll help. LE. Let's try that again. LE. G. Let's see. I guess no one's listening and no one can tell me what the London product is. London Exchange? How about if we do that? If we punch in London. And D. Oh. Maybe I did it right there. There we go. That looks, I guess that looks right. Yeah. So here it comes. Here's the London Exchange, the FTSE. Doing the same thing. It came from bottoms in here, went to all-time highs, just like the Dow Jones Industrial Average, I believe. Let's put the weekly up there. Someone was dead sure, like the Dow, the FTSE went to all-time highs. Here it comes. And we mentioned this here many a time. We think the best pairs trade, the trade against the dollar is this Swiss franc. Let's see. Let me see. All right. So let's scrunch this up. Yep. See that? It's at all-time highs. Woo! Had a good old sneeze there. So the Dow Jones Industrial Average and the London FTSE all hit all-time highs in this last move on the upside. Now, I guess you could say there's equity inflation there too at the same time. There we are. Now from there, we go to the, let's see, we were looking at the euro. Let's take a look at the British pound. We'll go back to the currencies here. There it is. Now the British pound is trying to get into the daily buy today. That's cool. And the weekly is right on the edge of going into the sell. It's at minus 0.00002. It was just 0.0001. Now it's 3. So it's close. We'll see how they play this out over the next 6-7 hours. And remember, we got these employment numbers kicking out in the next, I guess it's the next 23 minutes. And at the same time, we'll see the stocks move. They start to release some of the information, and the insiders get a chance to put their positions together. Supposedly, they release this information to reporters. so they can put out their analysis the moment that the report comes out, which seems to be ridiculous to me. Let them digest it like everybody else. But no, they have to come up with ways to be able to feed people, insiders, So, the times, it really makes you question all of reality. It does. It makes me question all of reality half the time. So, all right. So now from the that fell. Let's try that. Now from there, the British pound, is let's see. That's up on the screen. So we'll go to our favorite currency pair at the moment. We think that this one, if you want to be short dollars, this is the one to own. And if you want to buy dollars, I do it against the euro. And that's the Swiss franc right there. I think the Swiss franc is the best product right now. It got that into those 83s. We jumped in the buy 4 days ago. The weekly doesn't seem to really care that much about the whole move. It's just a dead cat bounce thing, Oh, here you go. There's the honest. Someone bought 30,000 contracts for SPY. 460s is expiring today. Let's see, where is SPY at? Let's put SPY up on the screen. SPY. Let's see. Is that under or is that in the money or at the money? Let's see. I'll tell you in a second. Oh, okay. Okay. There it is right there. There it is right there. It's trading at 465.89. So they bought the 460 calls? Let's see. They bought calls or puts? Contracts. Futures contracts? The futures trading at a different price altogether. That is a drop of... Oh, they bought puts. Okay. That is a drop of 1.6%. Okay. Opening interest, 465s and 460s are both nearly 40,000. That's not a lot. At the close of yesterday. OTM puts. Yeah. Well, maybe let's see if they bought those. That's some good gamma, and so it could be a straddle. It's a 1 day straddle. So let's say you're a money manager. Let's see, what was it? One call equals 100 shares, right? We'll go through this, make it a little easier for everybody to understand. So one put equals 100 shares of stock of SPY. And so then 10 obviously equals 1,000 shares. And 100, obviously 100 puts equals 10,000 shares. Okay. So then you go one more time, you got 1,000 puts, which comes out to be 100,000 shares of stock. When I was active in the hedge fund industry, when I worked in it, I used to trade 500,000 shares at any given time. So, that's back in the early 2000s. So, with the size of things today, so that means that 1 million shares, right, would be 10,000, right? So 10,000, so it would be 1 million. So you're only talking about 3 million shares of stock, right? Right, Giannis? 3 million shares of stock. So, let's see, what's the delta to something like that? I would imagine the delta has got to be about 15. Let me see if I can figure out what the delta is. Let me take a look at it. Do you have the software? I do. I can, let's see if we can put it up on the screen here. I'll put it up on the screen and show everybody. So that's 3 million shares of stock. That's not a lot of stock anymore. All right, we're getting there somewhere around here. I know I just opened it up. There we go. Sign in. Okay. Usually I just do these things in my head. I'm going to throw a guess out there. I'm going to say the delta is possibly 10. Okay, let's put it in there. Where's the symbol at? SPY. All right, let's see if we can find. There's the delta. And let's see, what is this? This is the calls. Let's put the puts in. Let's see. There's the 60 puts. They went out at 5 cents yesterday. So that's literally $5. So, what is that? $15 million, and that turns their spread into their thing into a straddle. And I noticed the deltas are just not very clean here. Oh, that's what is that? That's let's bring it down to. That's not where they went out. Here's where they went out, right there. So the 60, yeah, they went out at 5 cents. I don't know why they're not showing us the delta clearly enough. Let's see if we can do this. Does it show the delta here? I don't think it's 11, is it? It might be, the delta might be 11. What's that, 11.9? Something like that. So for every dollar, it'll go up 11 cents. And let me just check on my other system. I have another system I can look at. But I would say the delta is probably like anywhere from 8 to 10. That's what I would think. See, minimize that. Turn that on. Let's go over to here and put it in. And let's see, SPY. Enter. Options. Let's see. All right. I think that did it right there. Let's kill that. Let's see if we can find a delta on it. I usually turn that stuff off, but let's turn it on. Ticker action, average price, daily price. Let's add another column to it. Insert a column. Where's delta? Let's see, delta. Customize layout. All right, here we go. We'll get this in there. Let's see, where do we take it from? We go over here, trading tools, option chain, option trader, statistics, delta. Oh, there you go, the Greeks. Let's see what that is. Market depth, portfolio, scale trader, order ticket, buttons, pegs. Let's see. See what scale trader does. No. But I would guess it's got to be between 8 and 10. It could be as low as 5, a 5 delta. That would make sense to me. Probably more like a 5 delta. Chain. Let's see what that does. Settings. Let's see. Liquidity. Chains. There it is. Let's see. Let's see if it's on there now. See it. Let's try that again. Okay. Delta. Where is that? It's an options chain. Let's see if we can add that on there. Come on. Why don't I see it add to this? Show all. Reset the font. Apply. Yeah, I would guess that it could be more of 5, something like that. Or lifting the S&P up. That's not too bad. Check this out. Right there. Nice little pop here. Since supposedly, as I said, at 15 after, and now it's 18 after, they know. So they're starting to lift it up. They may use that to knock it down. But let's see if we can put this in there. Let's see. How about this? Insert. Where is it at? I'm saying it's a 5 delta. That's what I'm thinking it is. So what they did is they bought a straddle. So in essence, they're hedging 3 million. You know, it's not 3 million shares at 5 delta. It's more like 50,000 shares, something like that. 5%. 5% of a million is 5,000 times 3 is 15,000 shares. They're probably hedging 15,000 shares. That's it. That's not a lot. That's definitely not a lot. So it doesn't mean a lot. They bought it to hedge themselves. They might have 15,000. They might have 15,000 shares of SPY, and they just want a little extra. Who knows? They might do the same thing in other areas too, Dow Jones, so forth. They might buy it like that, but that doesn't mean a lot. That's not like you can never tell when you see prices like that what it means. You don't know what the other side that they have. You don't know how long they are, if they're just don't want to be too complicated and they just want to be short 15,000 shares of stock, and they don't want to do it outright like that, so they go and they buy $5 options. And so $5 30,000 times is what is that, $150,000. It's easy compared to, imagine if you bought 15,000 shares of stock. Stock is trading at 400 and some odd dollars. So, you can see the difference in that. All right, I hope that answers your question there. Also, at the same time, let's see, where are we at here? We got about 9 minutes. I'll stick around for the news, I think. Maybe, we'll see. we'll see how they keep on playing it out. But I guess more than anything else is I still want to find a title for today. Today's been a day. Let's see. Options, inflation. That's the title of it today. Really, we've talked about all the things. About economics. It's been a very broad view today. Your a classic doc reality. Where I discuss real facts about real things that usually occur in real life, not the fantasy where, it doesn't happen. So we'll call today's title, let's see, we'll call it, let's see, like that. Let's see, we'll put options on the title to start off with. Options, inflation, and growth. That's pretty much the title of it today. There we go. So now, what else can we talk about here? And we will, let's get rid of that off the screen. And let's get, this is the intraday. This is the, what is that? That's a 1600 and something. Let's go take a look at it in even a closer view. Let's look at it in a closer view, like right there on the Mr. Tesla. You can see here we're already feeling pressure and it's moving back down. They ran it from the 11-12 area up to the 24 area, and now we're at 19 again. So this is going to be a lot of fun, a lot of action. It's going to be, markets are going to be very concerned, and they're looking for clarity of direction. That's the thing, is that they're looking for clarity of direction too. So that's the real, like I said, they need. I've explained it already in the political terms, why money managers are not just reaching in and buying like there's no tomorrow. Because there is a tomorrow to them. They won't have a job if they do that. So that's where we stand with that situation. And at the same time, you can see we got about 6.5 minutes to go. And we're going to stay on to the whole thing. It'd be fun, just for the sake of it. I have no problem doing that. Trying to think what else we could do. Ooh, avalanche there. And let's see. Let me see. All right. While we're here, let's take a look at what is going on with the rest of the market. Let's move that out of the way. Where did we leave off? I think we got to the Swiss franc. Let's jump over from the Swiss. We'll go to the right there. We'll go to the yen. The yen's acting a little bit stronger. I thought that was weaker against the dollar. I was surprised, that interview with the Bank of Japan governor. I thought it would help them. It doesn't seem to be helping them too much. We've come off those low 40s, which we were looking for in this weekly sell, and we've gotten them now to 41.5, 42 area. We got down as low as 40.25. It superseded even our possibilities. And now we're back up at the 45 area there. From there, we go over to the Great Experiment, and you can see it's just, did that close at an all-time high yesterday? I think it did. And the answer is close of 67.12. That's 32.67.12. And right there is, I think that might be it right there. And that was 65.78. That was 64. That was a new all-time close yesterday. It just finds the ways to break those records and put it into the buy, too, at the same time. could steal one of the buys. I'm not going to worry about it. Oh yeah, let's put it in there anyway. There's got to be a buy out there somewhere we can steal. That buy. We'll go with that buy. Let's tighten that up. Move that over to there. They're talking about a possible leak of something yesterday. I'm not talking about chemicals. They're talking about information coming out. So there's the buy there. Let's jump over to the South African Rand. You got that right there. It's still heading up, with inflation going on. And what is that doing too? Go, 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 gold. There it is right there. There's the gold. You can see the pressure is on with that. And there's gold. It's just down a little bit, nothing major. And same thing with Silverado. Kind of down a little bit to 23.23. And you can see copper, $3.83, and Mr. and Mrs. Platinum at $959, and that's pretty much all that. Then crude oil, you can see right there, is trying to be up. It's at $73. Still, it is at least playing with the weekly buys, we noticed. And from there, where do we go from there? Let's jump over to the Nat Gas. We saw that earlier. Nat Gas is looking very, very firm. What happened there? Hello. It was holding up, looking good. And now they've put a smack into it. Let's just double check the Nat Gas chart on the beta. Let's do that. NG. And we are down to a minute before the news comes out. NG. There it is right there. Yeah, so something's wrong there. It's down, but that's not right. So we need to go like that. There. That's no better. Maybe that is. Let's try that now. And we are no more than 20 seconds away from the news. We're going to get the S&Ps up there in a second, so you can see what the stock market does. And here it is. There's the S&Ps. You can see it looks like they want to take it up. And it's ticking up. Now it's at 16, 15, 14, 13, 12. New lows for the day. Taking out the lows. And the number was, there it is up on the board. You can see it right there. It says new net jobs down 100. Is that 100? Jobless rate at 5.8 in December. Jobless rate in December 5.8. Average hourly earnings 4.1% up. Okay. And you can see stock market is still adrift on the downside. All right. And so here they come with the noise and so forth. They're going to now give us the analysis of it all. They're saying, let's see what those puts are doing. See if the puts are doing anything. Those puts are 4,000 at 5,000, and there's 8,000 offered. So, with the SPY down, where's the SPY at? Let's put the SPY up there for you. So it was stronger than expected. And there is the SPY is it's 464. It's down about $1 since we looked at it. The options are still 4.5. So it's not even. It's about a 4 delta probably, something like that. So that needs a little more action for it to go up just 1 cent. But it was a cheap way to hedge themselves. We are breaking down even more. And see, so with 216,000 jobs added, probably, when they take a look at it, more than likely over 50% of them are going to be government jobs. And that's what the problem is. Too many government jobs, not enough private sector jobs. So we'll be able to discuss this on Monday when we take a look and see what the numbers really were. So this is Doc from North America. Everybody have a safe and smart weekend. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, later, traders. Sounds like I didn't hang up yet. It sounds like the private sector jobs got crushed. That's what it was. A monster big drop in private sector, and more people employed now by the government. Let's see. I got the numbers and the darn pop-up system. I told that devs average hourly earnings were expected to increase. That's not important right now. Non-farm payrolls. The number one new employed with forecast to be 168. Actual number was 216. Here it is. Healthcare and university jobs and government is the increase, and everything else is dropping hard. And it's bad. It's bad. It's just flat out bad. That's what it is. So don't worry about that. Look at who's getting employed. So you had healthcare workers, which is basically a government job, since the government pays for healthcare in this country when everybody wants to pretend it doesn't. And then it's government jobs. Huh. All right, we're out of here again. This is Doc. Still more inflation to come. I imagine, because the private sector is not growing. It's collapsing. So that's where we're at. Doc saying, be safe, be smart. Catch you Monday.